Well, good morning, traders. And a couple of things that I've really taken out of the overnight session. One, we saw a buy the rumour, classic buy the rumour, sell the fact playing out in European assets. If you look at the French CAC 40, down 90 basis points, down 0.9%. Euro dollar has had a bearish outside day reversal at the trend high, so that's obviously something that a lot of traders are taking out today. I think if you've got a close and a break through that through Thursday's low of 108.75, that could be a really powerful sell signal for me. Seasonally, euro dollar really hates May. We've seen euro dollar actually down 9 of the last 10 Mays in a row, and I think the average fall in that time has been around 2%. So it's the worst month to be holding euro dollar longs, best month obviously to be holding euro dollar shorts. The seasonals favour being further downside here, but the technicals obviously need to come in alignment there, and that's what we want. Move through 108.75. I think euro dollar goes lower from here. What causes that? Who knows? But we want to see what happens with the dollar side of the equation. Will probably be the driver. We've seen dollar yen moving up through 113 quite convincingly now. That's been driven by higher bond yield spreads, and I think the Nikkei is really flying at the moment. If you want to see probably the most bullish market out there, I think you've got to have a look at the Japan 225. That for me is the most bullish market on the street. I think the most bearish market on the street at the moment is what's happening in the Chinese CSI 300. It's something I've been talking with clients about at the moment, is the psyche of the Chinese trader, which is very simple, and I actually quite like the simplicity that they show, and that's aligning their thought process, their directional bias with what authorities are trying to achieve. Now there's this stealth tightening of financial conditions in China at the moment. They're making the cost of liquidity more expensive for financial companies. They're raising short-term rates at a time when some of the economic data points have been slightly below expectations, and that's causing this tightening of financial conditions, and that's causing the CSI 300 to come under pressure. It's causing Dalian iron ore futures to come under pressure. Copper prices under pressure as well. So I quite like the idea of selling rallies in CSI 300. I like the idea of the Nikkei moving higher as well. They're probably the weakest and the strongest markets that we've got out there at the moment. Our opening call for the ASX 200, given what we've seen from the US markets, where we saw mining stocks under pressure there, down about 90 basis points, is for the market to be very flat on the day. That's where the open is. I think energy stocks will be interesting to watch. I think bank stocks and material stocks always very interesting to watch. Given that flat lead, given the fact that we've got the BHP's ADR flat on the day, it's pretty difficult to actually pinpoint where the weakness or the strength is going to come in our market. The big event risk, of course, is the budget later on today. I don't think people are going to be too angsty about that, to be honest. I don't think they will be in the currencies or rates market either, but that's something that people will be watching, and how that extrapolates into certain equities is yet to be seen. Obviously, we'll have to wait for those policies, and that will price into markets tomorrow. So a flat open, some interesting trades. I think you've got to keep your eye on oil. I certainly think today you've got to keep an eye on those iron ore futures just to get a sense of what's happening there and how that transcends into the Aussie dollar as well.